Hey traders, welcome to the tradingmentors.com. My name is Chris. I've been trading for over 35 years. I know it's a long time. I've made lots of mistakes and I've made lots of money and I've lost lots of money. But what I'm going to show you in the next 10 minutes or 15 minutes, whatever it's going to take, I'm going to show you the best gold trading technique that I've found in 35 years of trading. So you can implement it within an hour and you can start trading gold highly successfully using my 35 years of experience. So welcome to the tradingmentors.com. The tradingmentors.com is a website designed to help you become better traders, more successful. And this technique, I think you're going to love it, actually. It's very simple, very mechanical. There's nothing subjective about it. It's set and go. In other words, you won't have to do anything once you have the settings correct. You just walk away and the trade takes care of itself. So let's get into it, shall we? So let's see where we start. We're going to start with liquidity zones. These are important. Now this is the gold on steroids software, which I've designed over many years. I've switched some of the tools off because this is one strategy within the software which I really like a lot, and many VIP members, I mention this a lot. Outside bars are really important, and I'll tell you what they are in a moment. But I want to talk about liquidity zones. Liquidity zones are really important because this is where the institutions are looking to get in. So how we calculate the liquidity zones, I don't know if you can see this Asian session here as an example. The Asian session had a high here, it finished there, and it had a low here. So this becomes a really important area of liquidity. And what tends to happen is during these times, you can see this in the New York session. Let me draw that line there. So that is the New York high. That is the New York low. They're pretty faint, but you can see them there. This is the London open, the London high, and the London session low. So these are really important areas which are high liquidity zones. And what that means is as the price breaks down below it, there's highly likely to be stop hunting going on. And stop hunting is very popular for institutions, as an example. So as a retail trader, you want to be on the right side of the trade in terms of getting in with the institutions, understanding what they do and how they do it. So once you have these areas and zones, you can easily draw lines of liquidity before the day started, before you've even traded. So we can block these up here, down here, up here, and so on and so forth. So that's just a simple way of understanding where liquidity is likely to be before the trades are taking place. And these are often called liquidity sweeps. Okay, so this is where this example here, as you can see, comes up into this zone here, which is the liquidity zone for the Asian session, and the price doesn't like it. It has a liquidity sweep here. It takes all the stops out of the market, and then the price collapses, and all the retail traders, inexperienced ones, will actually have their stops taken out, and they won't know why. So I'm going to go into a little bit of detail now, and many VIP members in the Telegram channel will know what I mean by an outside bar, but I will explain it from the beginning just to help you understand what the hell's going on. So outside bars, let's deal with that first. So outside bars, you can see this channel, special settings. You can see this channel here. While the price is moving within this channel, it moves with the trend. Okay, we have another strategy for that. That's the continuation pattern, the trend. When everything's green, we buy. When everything's red, we sell. Okay, so this strategy doesn't cover this. That it will cover the outside bar strategy within the Trading Mentors. Gold on steroids outside bar strategy, as we call it. Okay, so I will go into a little bit more detail. I will be rewinding the chart, and I was showing you the strict entry points, the strict stop losses, and the strict targets. This is where makes you become a very, very successful trader. There's one pattern you're looking for, one set of rules, one stop loss, one target. That's it. So let's go through it. So this is the obvious one here. There's an obvious one here. So let me just explain. Let me just show you the outside bars. That's the best thing. Outside bar. Boom. 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 You get the picture. You're probably going to get 3 or 4 of these per week, and each one of these is probably worth between 200 and 400 pips each time. Okay, so you can add up the numbers. Even if you're $1 per pip, you can bank 200 or 300 pips very easily. Outside bar, boom. Okay, so you get that picture. That's the important thing. Now, if we get an outside bar within a liquidity zone, the example I showed you earlier probably is better, because let's do the liquidity zone first. We know that the Asian session is there. We know the London session is there. The New York session is the future. So we can see that during this Asian session high, there is a problem. This is liquidity, very high liquidity, and the price has an outside bar. So this is what you're looking for. I'm going to give you some examples, but what you're looking for at the time of entry, let's actually go back to it here. If it lets me, bear with me, I will get there. Determination. It won't let me. Maintenance is going on. Okay, let's try again. Oh, good. Okay, right. Okay, so we know we have the outside bar. We know we're in the Asian session. The Asian session high is here, and it coincides with that as well. So let's rewind a little bit more. Okay, so this is a 15-minute chart. We've got an outside bar, and there's one down there as well. Just see that there? See that there? Beautiful. So this, we have an outside bar, so that's tick 1. Okay, tick. And we have a high of the Asian session, tick. Now the entry point here, you want to see and play out this 15-minute chart. So you're waiting for this red negative candle to finish. Okay, you have to wait for it to finish. Oh, that's skipped on a bit fast there. Hold on a second. Slow it down a bit. Now you do have FEGs, that's gone on a bit too far, but let me explain what this is going on here. As the price moves outside and you have this candle here, this negative candle here, once it's finished, you want to be drawing a line here at the bottom of this. Let's zoom in a bit more. So you want to be drawing a line at the very bottom of this candle here, this negative candle, and you want to make sure that the next candle, which is going up and down, maybe you'd be actually getting into point here at 39.71.74. That's your entry point. So that is your sell order pending, okay, and your stop loss is up here, previous swing high. Okay, now your target is 2 to 1. I'll give you some more examples just so it helps you. Okay, and we can see there's 226 pips there. All right. Outside bar there. So again, let's freeze that. Let's freeze that. Let's get a bit closer. So here we can draw a line. We have the liquidity zone here. And we have London high here. And we have an outside bar. So the outside bar means that the price has come outside the channel. It does not like it outside the channel at all, at any time. And we can see that the price moves down. So now we can actually draw a line on this candle here and say that anything below $4,000 is showing some weakness. So we can actually put in a pending order, 4,021. And then we can put in a short pending order there, stop loss there, and 2 to 1. Do not go any more than 2 to 1. Sometimes during certain markets it might be 1.5, but 1.5 is 199 pips. If you're $1 a pip, that's $200 on the table each time. Let's go forward. I'll give you these examples just so you get a really good flavour of what we're looking for here. Now I've got the FVGs live in the market at the same time to help me. So if I've got an FVG here, I'm definitely interested in buying at this point here, but that's a different strategy. All right, I'm using the FVGs as sometimes as targets. And if the target is so close to then I won't take it. As we can see, the FVGs act as a really good support, even buying opportunities within the system. Let's take it forward. So here's one, just freeze it there. Again, another good example here. Here's the liquidity zone for the London low. Let's just check in to see where the Asian session is. The Asian session's up here. Okay, so in between that area is very interesting. And as you can see, the liquidity zone has been hit and we have an outside bar. The price has come outside this channel aggressively and is trying to grab the sellers. So the institutions will be taking a liquidity sweep here, which is basically their stop hunting. They're going to take all the stops out of the market. Once they've done that, they'll be buying it. So in this instance, we can say that this high here at 39.90 is going to be interesting. So as the price breaks it, it's a pending order, remember, we're not actually going to be buying that live. It's a pending order and your stop loss is going to be down there, somewhere down there. Okay, you can take it to the previous wick or you can take it to the previous body, but below the session low on Asia or London in this case is enough usually. So below the body of that is probably enough. 100 pips or so is usually more than enough. And 2 to 1. 280 pips. Now if you're $1 a pip, $280. If you're one lot, that's $2,800. Okay, the liquidity sweep is on. Now this was Friday, late Friday, so you could take profits out of this at any time, or you can let it rock and roll till the next day. It's totally up to you, but it is set and go. In other words, once you've set the order, the pending order for that particular buy, then that is it. Your stop is down there, you don't change anything. So you have a 2 to 1 risk to reward, 280 pips or whatever it is, and so on and so forth. And that is very, very common plan. So if you see that gold is acting really aggressively to the upside or the downside, you've got it breaking through a liquidity zone, a previous session high. If you have an outside bar, then just go to your 15-minute chart and look for the close of that positive candle in this instance, and then go for the limit order to actually get that pending order in. What else can I show you? Very, very simple, very, very straightforward. Just look out for these outside bars. That's all that's all you're looking to do. Outside bars are highly, highly profitable. Just going through a few sessions here. We can go back, we can go back. Once you've got the system in play, you can actually go back, and look at all these systems in play. Oh, that's nice. Set your limit order below the previous low, in this instance of that candle. Swing high, 2 for 1. If you want to hold it, well, that's 542 pips. And the session's ended there. So a great system. If you want to know more information, all the links are in the description, and very simple. We can get you trading this system within the next hour. Have a great day.